Business owners, have you heard of the tax cliff? The tax cliff is a concept I like to tell new business owners to explain what happens about 2 or 3 years into business when you get a few big tax bills all at once. If you think about it, when you're an employee, you go to work, you get paid, and your employer withholds your tax and pays that to the ATO for you. Now, usually at the end of the financial year, you lodge your tax return. If you've got a few deductions to claim, you might get a little tax refund. Very rarely do you have tax to pay, usually only if you have other income or other investments. Now, as a business owner, there's no one there to withhold your tax for you. What happens is when you start in business, you get to the end of your first year in business and you go to lodge your tax return. If you lodge it through a tax agent, you have all the way until May the following year to lodge that return. You've got about 11 months after the end of financial year. It's almost 2 years since you started in business, possibly, and you lodge your first tax return. In your first year, you probably had a few expenses setting up, maybe didn't have as much growth or revenue as you hope for future years. You might have a small tax bill and you make payment of that tax bill. And then what happens is the ATO goes, oh, fantastic. We see you're in business, you're making profit. We're going to start to ask you to pay tax quarterly. But you can just do it from the next quarter. You've already been in business for 2 years now. It's the end of the second year in business, and you get your first quarterly tax installment, which is just based on your first year's income, which, as we said, it's probably not very high. Now, you're going to keep paying those installments for all of your third year. And then near the end of your third year, you're going to lodge your second year's tax return. This tax return, hopefully, you've done even better in business than you did the first year, and you might have quite a large tax bill. Because again, in the second year, you weren't paying installments until right at the very end, and it was only a small installment based on the first year. The end of your third year in business, you get your second tax bill, and it's quite a bit bigger than your first tax bill. You've got that to pay, and then the ATO goes, oh, fantastic, you're still in business, you're making even more money, we want to increase your installments. And by the way, you've been paying installments in your third year, but they haven't been very big because they've been based off your first year's income. We'd like you to catch up all four of those installments now and pay the total that you would have had to pay on your second year's tax bill. All of a sudden, you've got two tax bills of a similar size hitting you at once, and that's what I call the tax cliff. And you don't want to get to that point, get a surprise, and fall off the tax cliff. Usually what happens, people in their first couple of years in business, they make what they can, they have to pay their personal bills or invest or treat themselves, and they don't really set aside for tax. But I'd highly suggest that you work with an accountant, you estimate your tax, you set aside for that to make sure that when those bills come, they are not a surprise, that you are prepared and that you do not fall off the tax cliff and your business doesn't go under.